Welcome to Mark Arnold's Finance. Today I want to talk about two digital payment company giants, that being Visa and Mastercard. I want to compare these two companies to each other. I want to let you know if I was an investor looking at buying into one of these, which one would I buy, and then give you my own opinion if I would buy these companies myself. We're going to go over my metrics chart that I share with a lot of the companies I go over. These are very important measurements and ratios that I deem are super important to look at. And also, we're going to be going over a lot with these companies. So if you're interested in either or, this is a video for you. And I want to thank one of my subscribers who recommended I do a video on Visa. So I thought I might as well add Mastercard. And so thank you very much. And let's get into this video first by looking at my portfolio performance. We will see here that my portfolio is holding up pretty well. The market overall is doing good. So I am now in the red 3.31%, and that's about $1,500 of unrealized loss. Be sure to look at all my holdings. If you have any questions, let me know. Anything in purple is the allocation by market value, and then you can see all my holdings. In green is a gain, in red is a loss. And this is something I show with every single video. I'm very transparent. These are not fake numbers. This is real money. These are real companies I invest in. So if you appreciate that type of transparency, be sure to subscribe. So let's get right into this video. Visa and Mastercard. These both are global payment processor companies. They deal with payment technology and facilitate digital payments. And I guarantee you, 90 to 99% of you watching this has a Visa or Mastercard that you use to make purchases. Both of these companies recently beat their earnings. These companies did very strong due to strong summer travel. And I think they'll continue to do well because we're going now into the strong holiday spending part of the year. So Visa's revenue grew 19% year over year, and Mastercard's revenue grew 15% over year. So these were some big increases with these companies, and I think that was due to the pandemic, and there's a lot of pent-up demand to get back out there, and there's a lot of people swiping those cards. Now, I do want to note that Visa recently increased their dividend by 20%. Yes, this is a very notable increase, and we'll look later on the metrics to see if these companies are attractive dividend plays. Now I want to look at how they've performed in the stock market up to this point. So we're going to be looking at 1 year and 5 year charts. So let's look at Visa's 1 year chart. We will see here that they're relatively flat. They're down about 2.19%. And if we look at Mastercard's 1 year, it's virtually very similar. They're a little bit more in the red at 4.71%, but they're both basically mirrors of each other. Now, if we pull that out to 5 years, we'll see Visa has grown almost 90%, but Mastercard has done a lot better, and they've grown at an impressive 131%. So over the last 5 years, Mastercard has been the better performer, but of course this is all history and we want to look at future. So starting with that, let's look at their market share. We're first going to look at the circulation of their credit cards. So how many credit cards they have out there. You'll see Visa has 49.54% of that market share and Mastercard has 34.52%. Now, if we move into the percent of purchase volume, Visa increases to a very impressive 53.99%, and Mastercard actually shrinks to 22.94%. So if we put these two up against each other, what this tells me is people that hold Visa credit cards spend more than those that hold Mastercard. So that's a very impressive thing for Visa and a very good thing, especially if you're an investor with that company. Now, the argument is that because Mastercard has a lower market share, they have more room to grow. But I will say this with some caution. There's a lot of people that say that with a lot of big companies that already are huge and have a lot of market share, and they just keep growing. There's nothing to say they won't keep growing. And Visa has some strength here because they have more people that use their cards, and that's just power, right? Mastercard is in second place, so they have a power of their own. But you look at companies like Apple, Microsoft, Coca-Cola, the whole history, people say they're overvalued, they're too big, they can't grow more, and they keep growing and getting bigger and bigger. So that argument to me is one you got to take with a grain of salt, but one that you should consider. Now, how do these companies make money? Well, they generally earn a small percentage every time a customer swipes their card, and they usually collect that from the businesses that use their cards. So they allow Visa or Mastercard payments. So the more transactions, the more profit these companies make. And in 2019, Visa had 5 billion worth of purchase transactions, and Mastercard was just shy of 4 billion. So Visa had more than 1 billion more purchase transactions than Mastercard. So that shows Visa's power as well. Now the world keeps moving to a cashless society, so I think there's still a lot of growth for these companies. There's a lot of opportunities. And Visa facilitates money movement across more than 200 countries and territories, where Mastercard facilitates money movement across more than 210 countries and territories. So I just wanted to say this because they're both globally known, which is important, right? That's kind of that brand recognition, which I want to talk about more at the end of this video. Now, a risk I could think about with these companies is, and mainly it's with Visa, they charge fees in order for these companies to utilize their cards at their businesses for people to pay with. And sometimes those fees are a little too high and companies fight back. So we'll see two examples here. First is Amazon. Amazon threatened to stop using Visa cards for payments, and that would have been detrimental to Visa. It also would have hurt Amazon, so they ended up coming to an agreement, but the risk is still there. Then you have Kroger, and I'm sure some of you heard about this, but they put a ban on Visa credit card usage for a few months, and then they ended up coming to a resolution with Visa. So it looks like Visa's the target, that they have the higher fees, and these companies are fighting back. But I will say this hurts both sides. They both have some power, but it definitely hurts both sides because companies, to cut Visa, you're cutting out a big part of your customer base. And so that's not good. And then if you're Visa and you have these companies cutting you out, that's going to hurt your bottom line, your profits and your revenue. So I think this will continue to happen and pop up, but I think they'll always get resolved because you have two companies that are at risk of losing profits if you stop these Visa credit cards from being used. So that's one of the risks you have to keep in mind, and it's more on the Visa side. Now, an opportunity is, in order for these companies, I feel, to keep growing, they have to become innovative. And recently, these companies started getting into allowing purchases with cryptocurrency, and they have pulled back, though, because I don't know if you've heard of the whole FTX debacle, but it's insane, and this company's going out of business. They're going under, and there's a lot of sponsorships pulling FTX off of arenas and stuff like that. So they're pulling back now. So if they'll get back into that later is to be seen. But to show that they're actually being willing to go into areas and be innovative is important. So they are getting also into the buy now, pay later side of things. And we see other companies like Apple doing this. And I just think that's allowing customers to spend more money. And so that's going to help the bottom lines of companies like Visa and Mastercard. So they have to keep thinking outside the box and get creative to garner more transactions and more customers to their businesses. Now I want to look at the metrics of these companies, and afterwards I will go through some more important points that you do not want to miss. But let's look at the metrics. Let's see how these companies do if we put them up against each other, and also versus the industry. So anything in green means they're well above the industry average in a positive manner, and anything in red means they're well below the industry average in a negative way. So the PE ratios on a trailing 12 months, both are very positive compared to their industries. We will see Visa is slightly cheaper at a 29.33 and Mastercard is at a 33.9. Now the 5-year average, Visa is less expensive with their PE, where Mastercard has held high. So they're both below their 5-year average right now, which means there's probably some buying opportunities. If we go to their earnings per share, these companies both shine on their trailing 12 months. They both grown at very healthy in the low 20% range. And earnings wise over the last 5 years, Visa's taken the win here at 20.15. Now revenue, trailing 12 months, they're about average with their industry, but over the last 5 years, Visa has definitely trailed more, so I give them a red here versus the industry average, and MasterCard is a few points above them, so that's a plus for MasterCard. Now cash flow, they both have 5-year growth in the 16% range, which is about average. Now their dividend yields are both tiny, they're small. So though Visa did increase their dividend 20%, it's only at a 0.88 yield, where MasterCard is even lower at a 0.58 yield. So as far as a dividend play, it's not very attractive. And their 1-year growth, Visa does win here at a massive 20%, where MasterCard is still at a healthy 11.36%. and their payout ratios are very healthy. Visa at a 26 and Mastercard at a 20. So dividend play, not the strongest, but I think they're very safe, obviously, and should provide some growth continuously for a long time to come. Now, the total debt to assets. Visa has low debt at 26.35. It's about the industry average. Mastercard has higher debt and it's above the industry average at a 39.24. So this is always very important to me. It's how much a company's leverage, and this definitely plays a part if we go into recession or have hard economic times. Visa should do better than Mastercard because they have lower debt. So that's something to keep in mind there. Now, gross margin-wise, they're both fantastic. Margins are these companies' shining areas. And Visa still wins as they're at a 70.53 versus a 60.34. So they're 10 percentage points ahead. So margin-wise, these companies are excellent. Return on equity, they both do great, but Mastercard has done exceptionally well with their return on their investments at 145.61%. Now, shares outstanding, they're both going down, but I did note with Visa, the last 2 quarters, it stayed flat. So hopefully with their next earnings, it shows that they are paying down their shares more because that's more ownership we get to own of these companies and they're not diluting us. And then market caps, you'll see Visa's obviously bigger by almost 100 more billion worth, and Mastercard's the smaller company. And we saw that with their market share as well. So overall, these are both healthy, solid companies when it comes to their financials. There are a few downsides, with their dividend yield and with Mastercard's debt. But I feel like overall, these are very strong companies financially. So what I want to talk about now is, despite these companies having good financials, good growth opportunities, and I think they're market leaders and they're trying to innovate, which is strength with these companies. But if I were to buy into these companies, this is an if I was an investor, so I'm not talking about myself, and if I were to choose one of these companies in this digital payment sector, I would have to choose Visa. I think it's the stronger company overall due to its market share. People are spending more on their Visa cards. I think they have more brand recognition. I'm going to talk about that in a minute. But they're both good companies, so why not own both? Why not do a 50-50% split or a 60-40 or an 80-20? I don't see why you shouldn't own both. They're both market leaders, and I think they both are providing opportunities in different ways. So that's what I would do if I was an investor considering getting into either of these companies, is I would just buy both. I think you're definitely doing yourself justice there. I just think Visa is the stronger company, so I'd probably put more towards that company. Now, a few more points I'd like to put forth before I reveal if I would invest in these companies, if I think they're good investments. A positive for these companies is the world is still moving from cash to electronic payments. We're becoming a more cashless society, which I think will provide strength for these companies for another decade or two at the very least. So I think that's some strength there, is you have these strong companies that will still grow. But some negatives that I want to point out is there's something between brand recognition versus brand loyalty. Both these companies have brand recognition, and I think Visa is the stronger company here. I think more people recognize Visa than Mastercard. It's just more popular. I think more people hold those cards, so it's just what you see more often. But brand loyalty-wise, I don't think these companies have brand loyalty at all. And I want to use Apple as an example. Apple is a company that has a big ecosystem, so you don't just buy one product, you buy multiple. They have a large moat, so they have a good competitive advantage. They have repeat customers, and more importantly, they have a lot of customers that are proud to own their products. They're proud to show that off. It's almost a status symbol. Where Visa or Mastercard, I don't feel hold any of that. It's not like someone is, paying dinner and they go, look, I have a Visa card, or I also bought these other Visa products. You don't see that. So I don't think they have the brand loyalty, which is very important to me as an investor. So I think it's easy also for customers to switch from one credit card to another, from Mastercard to Visa to American Express, or to many other credit cards that are starting to pop up, which Apple has their own credit card. So no one cares if you hold a Visa or Mastercard like they would an Apple iPhone or an Apple Watch. So you're also not buying other products. So they don't really have an ecosystem. They do have a moat, right? Because they have some competitive advantages, but I don't think they have a big moat. So that's just something I don't like, is they don't have that brand loyalty, in my opinion, which is creating loyal customers. And if you don't have that, I think your future is more risky. And so that's how I look at Visa and Mastercard. Also, there's risks with regulation because they are holding big market share of their sector, of their industry. And you have to keep in mind, you're investing in other people's debt. So you just have to think about that. And that's something that kind of settles a little bit negatively with me, shall I say. But some people might not care about that, and that's fine, right? We're all in this for profit, but there's sometimes other things you should consider. The last thing I'll mention is right now, credit card debt is at a near record high, and savings are being plummeted. So people's savings are going down because they're having to pull from that due to these hard economic time, and their debt's piling up. So I do think these companies will see some pullback from the transactions side of things. Not a lot of people will be spending as much in the future because of this trend. So with all those things to consider, I would not invest in either of these companies. And the main thing is the lack of that brand loyalty. I think that's huge because I think it's easy to just transfer to another credit card. I see people do it all the time. You're not creating those repeat customers. They don't have that ecosystem. You have a credit card, but what other Visa products do you have? You have none. So I would not buy either of these stocks, and I'd be very curious to hear if you agree with me on this or not. Do you hold Visa or MasterCard? Would you buy these stocks? Do you agree with me that, I don't feel like these are strong investments, or do you think they are strong investments? I'd like to hear your opinions because I don't know it all, right? Maybe there's other things I haven't considered, so I'd appreciate your feedback. This is just my opinion, and that's just me. So let me know what you guys think of this video. I appreciate you guys joining me. Be sure to subscribe, and we'll see you next time on Mark Arnold's Finance.